Hello and welcome to this week Markets Dashboard, a week that was not really exciting in terms of price action, but investors were focused on 2 points this week. First, the CPI release that was not so good and was kind of confirmation that stagflation is coming. We've seen the jobs report over the past week that was not good and prices are coming up hot. And the next event was the summit in Alaska between Trump and Putin, a summit yesterday that didn't produce much. No ceasefire expected, but it had an impact nonetheless on the market this week in terms of expectation of what would be the outcome. So let's take a look at what the markets did this week. So this was a classic week for risk on week. Specifically, we have risk on assets such as equities right above me, right here. This is the S&P for the week. Being up, and risk off assets being down, such as bonds, such as gold. We have Bitcoin slightly up after hitting an all-time high in the middle of the week on Thursday or Wednesday, I don't remember exactly, 124 something thousand. So we'll see that slightly later that Bitcoin has become a beta asset anyway. So it was quite a typical week in terms of risk on environment. Now, if you look at the S&P 500, still going up on a weekly basis, it didn't finish the week on an all-time high, but still climbing on a weekly basis. The VIX is still being compressed to levels where it will be difficult to be compressed much more than that. So we are entering levels where the potential for compressing volatility is becoming very low. Now, if we look at the term structure, the volatility term structure that we have here, which is midterm volatility versus short-term volatility, we see we are still in contango, which means that investors are seeing no specific risk in this in the current environment, but if we look at these specific term structures in terms of percentile, we see that we are around the 8th percentile of volatility term structure levels, which is quite low, and this is a level where it would not be unexpected to see some rebound of volatility and rebound of the term structure, seeing the market breathing at this point, specifically in the context of seasonality, where we didn't have much volatility already in August. We only at the midway of August. Usually September, it can be also quite hectic. So all that combined in terms of seasonality and terms of volatility compression and term structure behavior, it would not be unexpected to see markets, at least US equity markets, become a little more active. We can see that the greed and fear index for the S&P is in a neutral position. We are not totally greedy, just because we don't have an explosion on the upside at this time, such as the one that we had when we had hit a low in April. So everything looks fine this time, but still in a situation where volatility is being compressed, and it would be natural to expect the market to breathe at this time. Again, this is not an investment advice, and you should always read the banner on top or the bottom, obviously. So the week was a kind of a little revenge for the small cap that progressed much better than all other indices, whether it was the S&P, because it's the relative chart that I show you on a weekly basis. So better than the S&P, better than the Dow Jones Industrial Average, better than the tech sector. So kind of a revenge. So, but it's still, you know, at the bottom, it's probably more a catch up at this time. That was kind of overdue. If we look at the defensive sectors, I was mentioning it was really a risk on environment week. We see that the defensive sectors such as utilities, consumer staples, not healthcare, but both went down pretty significantly and continue their trend down. So again, this confirms that it was a risk on week. Now the bond sector, which is overall down, except high yield sector, which is more tied to risk on environments. But with the CPI numbers that we had this week, obviously higher interest rates are expected, which sent the bond down. Again, confirmation of expectation for stagflation in the future. On the crypto side, we had moderate positive week for Bitcoin, but still significant performance for the altcoins. We seem to have been entered kind of a altcoin season. This remains to be seen on a longer term, obviously, but Ethereum, you know, more than 15% on the week, Cardano plus 20%, about 10% for Solana. So altcoins are, you know, gaining some ground back that they had lost on Bitcoin over the last weeks, months. Now we saw that Bitcoin hit new all-time highs intra-week to finish basically flat, and it's kind of the same situation that we see on gold. Gold that has been on a range for quite a few weeks right now. Basically, I believe it seems that investors are waiting for the situation to unlock in terms of where economic policies are going, still locked around tariffs. You see that there was a delay with China, 90 days delay on China for tariffs, and also the resolution of the Ukrainian crisis. So a lot of factors at play where investors need to get more visibility to decide where they'll be going next on these markets. And one last note on what I was saying at the beginning, that Bitcoin had become a beta asset, a risk on asset, and just a visualization of that. You know, if you look at the COVID crisis, which is definitely the separation between two different environments. Between the COVID crisis, we had a correlation between US equity markets, S&P, and Bitcoin that was limited to a range of plus 20% and minus 20%. So very interesting in terms of the correlation. Now, the correlation is still limited, often less than 50% with the S&P equity markets. But you can see that from the COVID crisis, the correlation has been significantly on the positive side and positively correlated to US equity markets, making it a better risk on asset at this point. So this is it for this week, and I believe that if there is one takeaway to keep for this week is the volatility compression in an environment where volatility at these levels usually come back slightly. Market potentially needs to breathe. If we look at seasonality, September is very often hectic, ups and downs, some upper volatility that would be again consistent with that very low level that we're seeing at this time in terms of absolute value of the week, the VIX, and also the term structure. So I would share a word of caution about the market situation this week. We don't know what the market reaction will be next week about the meeting, the conclusion of the meeting, the no advances, I would say, for the summit between Trump and Putin. So again, as usual, risk management is key. Thank you again for joining, and see you next week. Bye-bye.